The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to a beautiful February 25th at the headquarters of Technical Trading and Investing. It is TFNN.com with your lovable and humble and squeezably soft host, David White. And this is the Power Trading Hour, as always. Same bat time, same bat channel, 2 to 3 Eastern time each weekday. What do we have going on in the marketplace? You would think it was the end of the world. And we'll get to that in just a minute. On this day in 1779, Fort Sackville was surrendered, marking the beginning of the end of British domination in America's western frontier. Getting sacked came from how badly they were beaten up at Fort Sackville. And if I remember right, Sackville ended up being Fort Knox, and Fort Knox for a long time in Indiana, and then eventually Fort Knox was moved to, I think it's in Kentucky, isn't it? But it got moved. But if you ever wondered where getting sacked came from, the expression was this day in 1779 when we had to kick some British out of Fort Sackville and send them on home. Yeah, they probably liked it better over there anyway. So what do we have going on in the marketplace? Let me pull up the current quote in this marketplace. And what else do we have going on? Watching this market closely. Okay, 1503 on the S&P cash. Came out this morning, did exactly what they tried to do every single morning for the last 30 days, and that is push this market higher. There was no volume. And we needed about 1 billion shares in the first, I would say, 40 minutes. We had about 650 million shares, so I wasn't really worried about it. We were looking at this market one more time, trying to push it higher. This is what happens at market highs, and we're going to get into that in just a minute. We were talking about Friday about how the summation index works in the April-May 2010 high, and we're going to get to that in just a second here. In the news, Samsung Galaxy 4 is going to be for sale on March 14th, and the Galaxy Note 8 is actually being shown in Spain. If you missed the Tech Insider Hour on Friday evening, we talked about this being the biggest week for the cell providers and cell manufacturers. It is World Mobile in, what's it, not Bangladesh, I'll think of it in a second, in Barcelona, Spain. That's where it's at. And it is going on, so there'll be some news out there. Last time I checked, Qualcomm was still higher. Take a quick look at it. Probably, yeah, it's still up 60 cents. One of the few really doing well out here. Yeah, up almost 1%. And, we're probably going to see that company doing well. The rest, not so much. So we're going to look through, if I can get this thing working here. I always have to chew gum and walk at the same time to do this show. Anyway, we were talking about the summation index, and I've done an under here. On the top, if you're watching on Tiger TV, is the April, end of April, May 1st, or I think it's May 1st or 2nd, maybe as far as May 5th, that the market was rolling over, and it reminded me exactly of that time frame. We see almost the exact same kind of formation, maybe a little dirtier this time. But not much difference, and this is kind of how highs come in. You continually try to push highs higher. There's a funnel of money coming in, and it goes narrower and narrower and narrower. You see normally the highs in the Dow come in last, the S&P second, because basically it is a inverted, it is a pyramid. and you get less and less stocks up at the top, and they drive and are a bigger proportion of that index until the backbone of that index is cracked. What did we have starting on Friday night right after the close? We had the a downgrade of England's debt, United Kingdom's debt. The Feds came in to rally. Everybody started throwing money everywhere over the weekend. Basically, we saw Japan and the Pacific Rim companies jump very strongly. We came back in. Everybody started throwing money at again at our market in the morning, even though the dollar was going higher. What else did we have? As soon as they started throwing money at the market, about 10:30, we had news that the Italian election news was coming in, and it wasn't good. Berlusconi, I think he's been convicted 4 times, but because he's in an office, he can't go to jail. There's some kind of weird laws. And if you've ever been to Italy, they're all weird laws. And if you've ever read Catch-22, there is a great deal of that kind of pervasive corruption at every level and in every person over there. It's just accepted. It's been out there forever, and probably why the mob continues to be a factor in Italy. A wonderful country, wonderful food, and a place that's just rampant with fraud and abuses. And well, what do we have? He's basically made a huge amount of promises that there's absolutely no way to keep. But the people over there are tired of the tax collector coming. They have huge taxes of which nobody pays, or no one had paid. By changing their laws to anything over about 1,000 euros meant that you had to actually go through a bank or use a credit card, so you couldn't wash your money anymore. Has driven people batty. We don't mind high taxes as long as we're not the ones paying them. They have a very socialist view of the world over there, and probably coming to here if we don't take care of it fairly quickly. But anyway, hopefully you are watching on Tiger TV. If you don't, you can always catch the repeat on Channel 14 on Tiger TV. Well worth taking a look at. In fact, probably very interesting. And if you can't see it well, give me a email at path@tfnn.com, and I'll be glad to send you this as a JPEG, and you can see it. But the first one was from my newsletter on 4/28 or 4/29 of 2010, and the one below it is that. But when you get these starting to level off and headed lower, you eventually get the hard break. But as long as the summation index is trending lower, normally you don't want to be long, and probably not a bad time to be short the market. When we look at the volume coming in, I wanted to get kind of a little into this. We're about 8 minutes into the show just to see how it's coming in. 2.4 billion shares so far. So again, not huge volume in this market. We're going to see how this thing bottoms out. We've seen the bulls come back and throw money at it twice, trying to get this thing back up. 1505. Anything below a close below 1508 today would be yet another nail in the coffin of at least intermediate tops. The downside, though, is this formation, which you'll look at in the end of April and 1st of May of 2010, shows you just how steep these kinds of retracements are, because what you are seeing is huge amounts of distribution, and why the market goes almost rarely goes sideways with as many advancers and decliners. A really good sign and confirmation of a huge amount of distribution at the top in markets. Some of the other ones that we wanted to take a look at and get a clue out there is Apple. It has failed to rally now yet again. And, of course, it's still a huge percentage of the NASDAQ and part of the S&P. As long as that one's not moving, it's going to continue to be rather problematic to get this market going. Other things that we have out here are, at least the energy sector continuing to show some weakness. And most of the ETFs I'm looking off are off maybe 1.5%. There is a natural go long energy and short natural gas play almost always on the marketplace. And, of course, normally you'll see one of the few stocks up on a day like this is UNG, which is natural gas. Eventually, those will break apart, but there's no desperate need for natural gas today. It is just a thing where if you're long crude, you're short natural gas, and if crude goes down, natural gas goes up within a buck and a half range on the UNG. So nothing to get in there. We're going to get into some other charts here in a minute if we can get this turned around quickly. And we'll try to do that. Boy. Okay, probably the biggest loser, and this is not a mistake today. That tick that just hit the floor at $2.34 is Affymax. They had a drug for kidney dialysis. It didn't so much help people or even make them a little sick. It basically killed a bunch of them, and they're pulling it off the market. It went from about 16 bucks down to 2 and change this morning. Look for this stock to be over. There is no play on this. They will be out of money. Maybe if they add additional stock, they may be able to survive. But again, that's going to dilute whatever stock that they do have, and probably pretty much in all efforts, Affymax, AFFY, which has been a pretty volatile, good trader in that biotech sector. Another one, let's go to BKS, which is Barnes & Noble. One of the other ones that's popping up here today. Again, not a bad day for a lot of these stocks that had been beaten down to pop in a counter trend move. The rest of the market's weak. The good time, especially when a lot of these stocks are highly short, to run them. There was a little bit of news out on Barnes & Noble to pop it up today, but pretty decent volume. It is right against the previous high, though, that it had on the 28th of December, and right may come in just with the same kind of volume. It didn't and hasn't hold the highs today either, and looks like probably all you can expect from a bounce out of Barnes & Noble. CEDC, the symbol on the next one, if we can get moving here. But I don't know. Let's see if we can find something else. I have a feeling this machine in here, the internet is flaky sometimes. So I'm going to assume, I'm going to assume that we just need to restart that internet connection. We'll be back in a minute. Give me a call, 877-927-6648, 877-927-6648. We'd love to take your call. And we'll be back and go through a lot of the movers today and see how this thing is wrapping up to close. Be back in just a minute.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Next stock I want to look at is the Commonwealth REIT, CWH. This is a office REIT. Came out with earnings this morning and dropped the Baby Ruth in the punch bowl. Huge volume. I suspect that we, like the rest of the housing market out there, we're going to see that a top is in probably in industrial and business REITs also. This is the first one out here this week. Most likely this thing's headed back to the October 31st low, which is $13.46. And just a monstrous amount of volume and movement today. Look for it probably to go sideways for a little while and then pull back. DDS is Dillard's. I think we covered this a little bit a couple weeks ago maybe. Let's go back to a 1 year here. Yeah, that's a better look at it. Came up, got close to testing a high, about 50 cents short. Volume was not all that bad. We were basically filling a gap that came down without a whole lot of volume. Not a lot of warning in this. One thing that you will notice out here is that the energy just never really came in this last leg from January 15th up to the high on February 15th. You got into that gap down really wasn't all that much. This is it's blowing it out. It's headed down to $71.69, which was the September 28th low. Maybe this is just the beginning of what we are going to be seeing as lots of retailers this week, Tuesday, Wednesday, Thursday, are going to be reporting, and we'll see how that comes out. Elan Corporation, one of the few out here jumping back up. This thing looks like it wants to try to get back up and fill a gap down that had with heavy volume, and probably too tough to play out there to give a good indication. Endo Health Solutions, ENDP, up on pretty strong volume. If there was one looking at making an ABC up, you might want to look at this one. Probably not a lot to report about. ITT Educational Services, again, this is a sector that's destined for bankruptcy from Apollo, Coco, all these other companies. ESI, probably the best of the worst. They actually do graduate some people that find some jobs. Not as bad as the Apollo and the online education firms, but still problematic and probably going to get hammered in any kind of sequestration issue. They still get some money from the government, but not a lot. I think it's slowly circling the drain. Another one that looks like it's circling the drain is a Frontline. FRO is the symbol on it. When we look at it, this thing's finally, it was broken down over a long consolidation level. Finally, he's given it up. Frontline is oil tankers and bulk oil, ore, and all that. And if you can't make it in today, you're certainly not going to make it on any kind of pullback. But certainly having a problem as one of the dry bulk shippers out here. Let's take a look longer on this thing. This thing wasn't that long. May 3rd of 2010 was pressing $38.85. Just a zero pricing power in this sector. Let's see what Dry's doing out here. Dry's, I guess I need an S, right? There we go. Still not doing anything. Higher volume low in Dry's. So it's at least going to come back and try to test the $1.46 level on November 16th. Not a lot of movement back in here, but wouldn't be surprised if it got some. Another one in the movers out here today. How much time I got left? Another one filling its gap. Probably not expensive enough to go short, but certainly like this pattern, it's been working extremely well for us. And that is the huge gap down on volume, consolidating, 6-12 months, coming back, starting to fill that gap. And in this case, sold off pretty much, got to $11.89 today, and right back down the other side. Other movers today are Panel. This one been trying to consolidate back down here to these lower levels. What we're seeing is support, but what happened the last time down here was a heavy volume low at 7.7 million shares. The previous two down legs were both in the 2 million share range. So what we're looking at is a gap down on monstrous volume. That was the November 8th low. This thing's going to work its way back down into that $21.55 area on this move back in the marketplace. PANL. And Cree, never liked either one of these so much. Let's see if Cree's coming out. And it's looking a little better out here, but I suspect it's probably going to have the same issues. We'll be back in just a minute. Give me a call, 877-927-6648.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And we're back looking at Zynga. It's popped again. We were talking about it a little bit on the Technology Insider. Pretty good news, at least in the short term for Zynga, in that they took their push into mobile gaming. And when I mean gaming, I mean talking about actually playing poker for real money on the internet. And if you missed that on Friday night, we talked a little bit about Nevada passing a law in the dead of the night in an emergency session to get online poker on the move. We've also got the governor of New Jersey signing it, and probably start seeing these a lot of these states continue signing it. We do have a call, and it is from Max today. How you doing, Max in Houston?
I'm doing just fine, David. I hate to belabor this thing about McDonald's, but it seems acting very strong today. So I'm probably considering, closing out my my puts. I have some April, I think they're 92 puts, because it looks like it's going to go back to 99. That's what I'm.
What month are they?
April. And I think they're the 92s.
Yeah. I mean, right now, all you're doing is testing the previous high. Let me get a little closer check on there.
But I think it's breaking it right now.
Yeah, you're getting, well, I mean, I've got 4.8 million shares against 5.4. So you're probably going to get an equal volume of that. But I've seen so many of these stocks testing highs and getting a little bit more volume and closing way back down the next day. So I think I would probably, since you've got some time in these, I would probably give it another day or two. And I normally wouldn't, but just like the market today ran one more time to the highs, this could be doing the exact same thing. Again, people push to this in times of economic uncertainty because they think people will be at least able to go to McDonald's for their dinner if they're not going to Applebee's or Red Lobster or something, right? And I think I brought that up last week. That's the biggest problem with this in a down market is people go to it, whether it's going to do good or bad. The knee-jerk reaction is to go to that, and it's probably what you're getting here today. But the volume is not that exciting out here. So I'm not going to say, if you see this thing come in with like 6 million shares by the end of the day, I wouldn't, wouldn't be a big deal if it could still close back below that 96.33, which would be a fairly decent signal. What it is probably telling you is there are better shorts out there. And I say that last? Did I say that last week?
Yeah, and I'm learning, and I'm doing good. All my housing stocks I'm in the money on those, and so everything is working well. This is the only one that is not.
That's the only thing is you think this one should go down, but the knee-jerk reaction is to go ahead and buy it. But one thing, a lowering tide takes all boats down, and this one will probably come back. So unless you really need the money.
I really don't. So.
I think you can probably get it in a day or two. There's so many stocks that have rolled over huge spikes up that I'm just thinking this is the end of an extremely frothy market. One of the other things that would, and of course I'm not going to be here at 3:45. Hang on a second. I hate these little things that make you give them passwords right in the middle of my show. What I was going to say is if you get below a 1508 close on the S&P, that's yet another sell signal. So even if you're not right maybe on the stock, you can be right on the market and still get your money back. This thing is going to probably pull back a couple of bucks, but it's not uncommon to see these stocks pop on a weekday like today. But once the market cracks, it'll come along with the rest of them. I just like faster horses than the Burger Kings or McDonald's or Yum Brands of the world when this is headed down. But I think you've got some stocks coming out Wednesday and Thursday in retail, and I think that those are going to be bad, just like we saw in some of the ones today. And you're probably going to get your money back by then, and then probably a better time to maybe get out then. I've been in a stock for about a week and a half that blew out on earnings and came back, and I closed it out today for just a very small loss compared to what it would have been on the first day of earnings. So a lot of these, just give them some time, they'll come back into you.
All right. Well, thank you very much. I appreciate it.
You bet. And see, we got a call from John in Apollo Beach. Is it PSEC?
Prospect Capital, PSEC. P as in Paul.
Okay.
I was looking to invest in this perhaps for a year or so.
Okay. Well, this is one of the uglier charts I'd want to short if it was a little bit more expensive. You need a retest before you can buy this thing of $9.80. So if you were going to invest in it, if it comes back, you see something like 5 or 6 million shares, just under $10, as it gets into those two candles from November 14th, then I would look at it. And I think if this market continues to pull back a little bit, you've got every chance of being able to buy this thing at 980, or maybe even probably right around in there. You just want it to close. You want it to go below it. You want it to close back above that 980, and you want it to have less than 9.3 million shares. Personally, I wouldn't buy it unless it had like 5 million shares on that test. But you're looking at the November 14th low now before I would buy it. Let me put it that way.
Okay.
And even then, expect it to consolidate a little while. Do you know this company personally or something?
No, I've just been doing a lot of reading about its investments, and apparently it has a new investment in Realty Income, stock symbol 0, I think.
Yeah. I mean, this one is the pattern I've been talking about for about 4 weeks now, which is or maybe even 5 weeks. This huge gap down on monstrous volume that happened on the, November 2nd. And that was on 37.5 million shares. It's never had anything like that again. It's come up here and it's probably gasping for air, and you really just need a test of the previous low, which is going to be November 14th.
I'll be patient.
Okay. That's it. The difference between gambling and speculating is making sure that you've picked something out, not in the haste of the battle, but thought of something before it's gotten there. Anyway, you can be like Max and John and give me a call, 877-927-6648. We continue to see a weak market and not doing right much now. Really looking for a close below 1508, and I think we're certainly going to get it. Volume has not picked up so much. Again, most likely what's going to happen, I guess, is we're probably going to have some disappointments or more disappointments in the retail space over the next couple of days. Probably going to open up with a gap down below 1498, and then that's going to be the next signal that we're headed for 1475 on the S&P cash. Zolt, get to Zolt here in a minute. Zoltech Companies, Z-O-L-T is the symbol. We've got one of the few out here actually breaking a previous high on heavier volume, at least on the 6 month. Let's go back and look at 1 year. This thing's coming back up to its gap down that's acted as resistance right around the $10 mark. Some of these stocks still very heavily short. When we talk about stocks that are monstrously short that have pulled back and busted out, even with huge volume previous highs, but have closed back below them. Zillow is a good example of this one. The thing just blew out on earnings, and as it came back down, it is probably not the one to short now, but certainly we're seeing a lot of stocks break previous highs and not hold them even that day. In this case, it blew through it with twice the volume of the previous high. And even like on McDonald's, I could see a similar pattern happening for Max, if you want to look at that. But just so many of these out here doing the short move and squeezing everybody out just before it's ready to turn on the marketplace. But we'll see other things. I've got some other stocks in here that we want to look at and see how they're doing. Cisco is probably one of the more interesting ones. It also had higher volume and pulled back around, but I suspect a great deal of that is short covering. What I really disliked about Cisco was these two legs going up, where we saw a huge volume off the lows on the November 9th low to the December 19th high at $20.54. He had a lot of energy, he had good volume. It did a small 5-6 day retracement and then started back up. The retracement took a whole lot longer, and really other than in a few days when the stocks were actually going sideways, did this thing actually pick up any more volume. Looks like to me Cisco is at least coming back to the $19.75 level, and wouldn't be a big surprise to see the stock come back much further and back to the $16.68 level. John Chambers, the CEO of this company, has said he is leaving, and it looks to me like everybody knows he's fattening the pig up, and he's pushing out his options over the next year or so as he exits stage left. And as he does that, I think probably be a lot of sellers wondering what's happening out here in the market. I talked about, I think it was last Wednesday, covering my gold short. And one of the reasons why is in gold, one of the early guests Tom O'Brien had on his show in 2000 or 2001 was Jim Sinclair. He was a big shot in the 1980s gold bull run. He always said, and I went back and checked it, and it looked fairly good. One thing that you normally see is the very big moves in the gold market are when the stock market is going flat. And on both the top and the bottom, you see some fairly big moves right before the stock market, the equity markets actually start to move. Probably starting to see that today. So as long as the market's moving sideways, being long and being short, a lot of times you get really huge moves. Once the market starts moving again, normally you will get the counter move out of it. But one of the other things I saw was tests of previous lows of some of the stocks in the gold sector, the gold miners actually testing lows on lighter volume. In the case of Harmony, it did that, and not a big retracement out here yet, but big enough for me to stay out of gold for a few days. I still think we could see 1610, 1615 on gold again and be able to pull the trigger once again. We'll have to see how it comes back up there. But what we got was at least a short-term reprieve. The February 1st low of Harmony was $6.41 with 5.5 million shares. You got into that with 3 million shares on the 20th, and it slowly pulled back into this trading range. Normally, you like to see some kind of sign of strength. Very light volume out here today. I don't think gold has turned, but I think at least you've got a momentary reprieve. IMAX is another one of these companies that hit highs on higher volume and unable to hold that high. IMAX is the symbol. We're seeing the high out here at March 2nd, $26.68, 1.3 million shares. And February 21st, $26.73. So a nickel higher. You had almost 1 million shares more, 800,000 shares more. But it could not hold that high. And another good reason to be very scared of these, basically all these technology stocks at these highs have been rather weak. International Paper is one you really want to be watching. This is another one of these that is a canary in the coal mine in the marketplace. The reason why is, of course, they make all the paper for everything that gets packaged out there. If it's dog food, if it's cardboard, it has to be shipped in something, and it's going to be paper. International Paper is generally fairly good at predicting the, at least more, what we call it, less tech and more Rust Belt businesses out here. And another one where we had a huge volume coming out in this over the last couple of days, and back over above it and closing below that previous high out here. These are a lot of times what are called blow-off tops. Unfortunately, most of these bigger companies are not going to be as huge as something like Zynga, or not Zynga, but what was it? What's, keep my eye on it. Zillow, with a huge spike out and then a huge retracement after it. But you will see a lot of these with these kind of huge blow-offs, testing the top, instantly reversing and running, which is normally a good sign that the market maker for these stocks or a operator in that stock has fairly decent control, runs all the shorts, gets out of his positions by selling back to those shorts, and he's back in it. Another one we're going to get to when we come back is Nova Gold, another one that's putting in light volume lows compared to the previous low out here. So we'll keep an eye on Nova Gold, NG, when we come back. Give me a call in the meantime, 877-927-6648, 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll
get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
I don't hear anything. There we go. Dive. There is a dive in that, isn't there? Dive, dive, dive. Well, we're hoping this, at least I'm hoping this market rolls over a little bit. Didn't get a lot of action during the last half of the show. We were right around 1505 on the S&P cash, 1504 now, 2.7 billion shares. So again, not a lot of movement out here so far, but we'll keep an eye on this. Anything below 1508 is a win for a top in the market. If you're bullish, probably a good time to start thinking about paring back your positions or buying downside risk. Again, we've had a VIX up here that's up about 17.5%. It's gone from 1357 to 1665 today. Pretty good indication that we're done having the easy ones out here for moving. And again, buying volatility, probably one of the best bets over the next 30, 60 days, I suspect. Seeing a lot of stocks move, but again, a lot of these ones with heavy institutional support are still being held up. That's probably one of the problems also with McDonald's of our caller earlier. You like to have, especially these techs, people aren't wedded to them as much. They're willing to buy and sell them a little quicker. I'm looking at some other stocks out here that should crack fairly well. And in fact, I've got a couple in my portfolio that are confirming lower prices today. And we've talked about some of these out here. But probably the energy sector, to me, continues to look the weakest. I suspect that, let me see if I can get a quote out here on that. It's just so tiny. I've got to read this stuff from about 5 feet away. I've got good long range vision, but little tiny things up here continue to be a little problem. 93.04, so we were off 9 cents, although I think it got to a high of 94.50 today. Still think that we're going to see crude back down in the $65 range in the next 9-12 months. And I think we're ready for that next leg down in crude. A lot of supply coming on from South America, a lot of supply coming from us. In fact, the best recipe for lower prices is high prices. Higher the prices, the more people are going to get out there. We've heard the story about peak oil forever, and then, of course, everybody goes out and drills and starts finding ways to find oil at higher prices, and the oil prices basically collapse a great deal out of it. We saw gold move $20 higher again today, and again, it is not uncommon to see people run into things like McDonald's at the first point of a move, or gold. And of course, at $15.93, another $20, no big deal in gold prices. We could see that easily in the next day or two. We want to see how it comes into about 605 to 615, or excuse me, 1615 on gold, and see how it's doing out here. Just wanted to look at a few other ones. We've got the dollar index up about 20 cents. Not that big a thing. I suspect we're going to pop up here, though, to about 84.5 over the next couple of weeks, and that's going to put a lot of pressure, continuing pressure on equities. No matter how much money that Ben Bernanke dumps around. Again, they dumped a lot of money over the weekend trying to paper over the problems that England was going to have, and you just can't do that much. Eventually, you do run into problems, and there's nothing you can do about them. I think Ben Bernanke has pushed this market as far as he could. Well, anyway, you have a great and safe evening. Hang on for another great 3 hours of programming on TFNN, and always catch me at 2 to 3, same bat channel, channel 14 on Tiger TV, same bat time. See you tomorrow.